Greetings to all, and thanks for returning to Everything Tesla stock. Tesla submitted a request for a 3-to-1 stock split at the start of June. Many investors were surprised by this, especially given the decline. So, you better keep watching this video if you're interested in understanding more about the divide. Many equities, especially those of big corporations, have been declining due to the general slowdown in the economy. When it came to falling stock values, Meta, Amazon, and Microsoft were not spared by fate. Not surprisingly, though, Tesla's stock has also been trending lower. Many of these companies are doing well and are not overly concerned despite the recent decline in stock prices. Indeed, they see the stock price decrease as a typical reaction of the market to many geopolitical and economic events that are taking place right now and impacting the global economic landscape. Adam Jonas, a vice president at JPMorgan Chase & Co., said that Tesla is now leading the race in the electric vehicle industry. Additionally, Mr. Jonas likened the EV market to a marathon. According to him, Tesla has surpassed other companies, reaching mile 21, while some are still tying their shoes at mile 2. Adam Jones also asserts that the recent track record of EV deliveries validates his assessment of the situation. He claims that this demonstrates that Tesla is well on its way to taking the lead and getting stronger as the marathon progresses. Any new information regarding Tesla, including the news of a 3-for-1 stock split, is likely to generate attention, in his opinion. Describe a stock split, please. When a company chooses to increase the number of outstanding stock shares, a stock split takes place. Each share's value actually drops as a result of this. A stock split, according to Forbes, occurs when a business distributes additional stock shares to its current shareholders without decreasing their value. What does this entail for investors then? First of all, since each share is becoming less expensive, more individuals will be able to purchase the stock, making it more accessible to them. However, only a tiny percentage of people benefit from it because most brokerages offer the opportunity to purchase fractional equities if the whole amount is too high. Additionally, it's critical to remember that dividing stocks does not reduce a company's worth. For instance, a $100 share firm X is owned by an investor. At that point, the investor will own 2 shares valued at $50 apiece, should firm X elect to split 2-for-1. As a result, the investor now owns 2 shares rather than 1, but their monetary worth is unchanged. Research from Bank of America has shown an intriguing fact. Some companies already split their stocks in order to outperform the stock market as a whole. Why is it the case? One possibility, though, is that following the split, investors jumped at the chance to purchase equities at a lower price. As a result, businesses that had high share prices frequently split their stocks, which increases investor access to their shares. However, given the post-COVID consequences that hurt Tesla's factories and the economic downturn brought on by geopolitical attractions, the circumstances surrounding the Tesla stock split is not so simple. In actuality, Tesla's stock has decreased. The $44 billion US dollar acquisition of Twitter by Elon Musk is another one-off that has hurt the price of Tesla's stock. Musk sold 5.2 million shares of Tesla stock a few weeks ago to fund the offer to buy Twitter, which has had a devastating effect on the company's stock. Tesla filed a 14F form outlining the company's plan for the upcoming August 4, 2022 annual shareholder meeting with the U.S. Securities and Exchange Commission. The EV behemoth detailed several agenda items in that document, one of which was the plan to carry out a 3-for-1 stock split. Through this program, the number of existing Tesla shares will be tripled, and the price of a single share will drop by 3. As previously stated, there will be no impact on the value from this. The board of directors at Tesla made the decision to split the stock 3-for-1. The board states that one of the reasons it chose to go forward with the split was to increase the stock's accessibility and affordability for both the general public and Tesla staff members. This is a commendable resolution because it allows those who were unable to participate previously to obtain access to the shares. According to Tesla's 14F filing, while this value appreciation has led to our employees benefiting enormously through the years, we want to make sure all employees, no matter when they join, have access to that same advantage. The board of directors' decision to proceed with the split occurred after Tesla stock prices fell 42% at the start of the year, which is a little unexpected. Within an hour of the news being released, the stock price rose by 1%, indicating a favorable impact from the split announcement. As per the aforementioned 14A filing, the authorized shares amendment's primary purpose is to enable a 3-for-1 split of the common stock in the form of a stock dividend. Additionally, the document stated that Tesla issued 1,036,390,569 shares of common stock on June 6, 2022, and that the 2 billion authorized shares of common stock are insufficient to carry out the 3-for-1 split. The 14A filing further states that if stockholders agree to the modification of the authorized shares, the board of directors will approve the split. As previously stated, investors will receive special dividend payments to facilitate the aforementioned stock split. Returning to the rationale for the split of the shares, we cite the following from the 14A filing. We need exceptional talent to be attracted and retained, and Tesla was able to accomplish so with the support of a highly competitive pay scheme that gave every employee the opportunity to receive equity. We think that by resetting the market price of our common stock through the stock split, our employees will have greater freedom in how they manage their equity. In Tesla's history, this is not the first stock split. The corporation announced a 5-for-1 stock split back on August 11, 2020, and it was implemented on August 31st, a few weeks later. Prior to the initial stock split, Tesla's value per share was $2,213 USD. The share dropped to $442 after the stock split. Prior to the announcement of the stock split, the share price was $1,300. This news caused the share price to rise to $2,213. The announcement also states that Tesla intends to add 4 billion more authorized shares of ordinary stock. According to the company, we are now authorized by our certificate of incorporation to issue 2.1 billion shares, which are divided into 100 million shares of preferred stock with a par value of 1/100th of a dollar per share and 2 billion shares of common stock with a par value of 1/1000th of a dollar per share. Tesla is able to increase the number of its common stock from 2 billion to 6 billion thanks to the authorized shares amendment. Only the common stock component of the permitted shares of preferred stock will be altered by the amendment. According to Tesla, we are submitting to our stockholders a vote to adopt the inclusion of certain provisions and the proposed amendment certificate to increase the number of authorized shares of common stock by 4 billion. The fact that renowned U.S. business entrepreneur Larry Ellison, an EV board member, owns 1.5% of the company's shares is another compelling revelation made by Tesla in the 14A filing. Mr. Ellison plans to step down from his position on the board. Although Elon Musk, the CEO of Tesla, owns 23.5% of the company, Vanguard Group owns 6% of the shares, making him a substantial stakeholder. When Elon Musk purchased Twitter, a massive social media network, he sold off a significant portion of his Tesla stock. Tesla has a market capitalization of $720 billion US dollars, and its shares currently trade for $703 US dollars. After the split, Tesla stock will be roughly $233 US dollars per share if there are no significant fluctuations in the price, and the 3-to-1 split is approved. Additionally, there has been discussion about Tesla wishing to put the idea of reducing the board of directors' tenure to a vote among its shareholders. The board of directors members will serve 2-year terms rather than 3-year terms if this request is granted. Please share your thoughts in the comments section below regarding this 3-to-1 stock split. Is it a wise strategy given the state of the economy right now? We appreciate your time, and please remember to click on one of the 2 videos that are displayed. I'll see you over there. Music.